All right, the Feds just got done with their meeting and they lowered interest rates down 0.25%. This is going to impact you with a home equity line of credit unless you're on a fixed rate. So if we did a loan for you and you're on a fixed rate HELOC, your rate didn't change. But if you were on a variable, your interest rate just went down 0.25%. Now, a couple of things came out of that meeting that I wanted to share with you. The 2025 forecast originally, going back a couple of months at some of the Fed meetings, was that we would see somewhere between 1 and 1.5% in additional reduction in 2025, and that's been lowered down to somewhere around 0.5%. So you'll still see some lower rates here in the near future. It sounds like at the moment they're going to slow the pace of that down a little bit. Some of the reasons why is that, if they bring the cost to borrow money down too fast, it cranks up inflation even worse because it becomes cheaper for us to use those funds. So they want to be really cautious with how quickly they bring those rates down. Now they also have to balance, unemployment and keep the economy rolling. So they need to make it somewhat attractive. And so we'll probably still see some of those reductions moving into 2025, but at a slower pace. It's about 0.5% is what the forecast is now. It's been revised from that 1 to 1.5%. So sharing that with you just so you have line of sight. If you have a home equity line of credit, we did not do the fixed rate, we did the variable. You lost 1/4 on the rate, came down a little bit, you benefit, and then moving into 2025, you'll probably see another half spread out amongst a couple of meetings throughout the year. So probably expect the next one maybe January, February, and then after that as we move closer into the summer. All right, guys, have a great Christmas, and we'll back at you a little bit later with some more updates as we see them on the site. Take care.